Hey, Dave Reams, Managing Director, Calidus Resources. Calidus is currently developing stage one of the Warrawoona Gold Project in Western Australia. Stage one will deliver 90,000 ounces per annum on average, commencing in the June quarter of next year. Very rapidly thereafter, we'll be developing stage two, which will take us to 130,000 ounce per annum on average run rate, maximum out at just under 140,000 ounces per annum, and we are Australia's next gold producer.
That you are, Dave. How are you? Good to see you again. Saw you in June. A few things changed in Australia. You're in lockdown again. Enjoying it?
Well, not in Western Australia. We don't go into lockdown. We're sort of continually locked away, let's say, from the rest of the country and the world. So not locked down, but locked away.
Locked away. See, the borders are shut. That's pretty tricky, right? For miners in Western Australia, you get a lot of people coming into country to help with the mining industry, and they're either trapped there or trapped outside unless they want to fancy doing a 14-day quarantine. Is that the way it works?
That is correct, and there is certainly pressure building in industry that we need the borders open. There's talk about quarantine centres up in the Pilbara to fly people in from overseas or what have you, because the skills crunch is only getting worse day by day in WA. We're an immigrant state and we need those borders open as soon as we can.
So what's that doing for costs up there in terms of not just people but also materials coming in and delays to your operations?
Yeah, so it really is, I suppose there's a whole variety of things. So from our point of view, from a construction, we're okay with costs. We've got a lump sum contract on our process plant. If you were building now, and there's a few examples of ASX companies who have just put out optimised feasibilities and whatnot, their capital costs have gone up, steel, diesel, people, and certainly our OPEX will go up slightly. Labour's from our DFS is probably up 10% cost-wise, and that adds maybe 4 or 5% to our costs overall. So, there is that tightness of labour drives higher wages as everyone tries to grab the available labour, and that's reflected on the bottom line.
Lovely. Inflation.
Here we go again. Boom and bust in WA. Luckily, we've never seen that before.
Yeah, I know. Right, okay, so obviously it's something you've got to handle, something that everyone's got to handle there. Okay, well, let's hope the borders open up soon and some sanity prevails. Let's talk about you guys. So you are absolutely delivering everything you said you deliver. Any issues along the way? We'll kind of get into the construction bit in a second, but are you finding any issues with the business of doing business?
No, none whatsoever. As you say, we're locked in our little state here, not much else to do, so might as well build a gold mine, and it allows a large amount of focus for once. People aren't travelling, no one's taking a lot of holidays. There's only so many times you can tour our great state. So, it sort of helps focus the mind at least.
Right, okay. Well, you're drawing down some money to actually do the construction. So how far along are you with the construction? I know you're sort of aiming for sort of April time. So where are you at the moment then?
Yeah, so as we stand today, in the order of 60%, give or take.
Right.
Complete. We're through probably our peak spend at the moment, especially on the plant. The spend starts to tail off a bit. We'll be finishing off things like some of the civil works like the Towers Dam in the next 6 weeks to 8 weeks. Then we'll just be pioneer mining in the plant and just really focusing in on those two areas. So a lot of the ancillary work is done, and it's just all about making sure the plant's ready to go and we've got ore on the stockpile. So
with regards to the 110 million debt facility we talked about last time out, I noticed something, you've drawn down 25 million bucks. I mean, are you going to utilise all of the 110 or are you sort of well within budget, given what you just said about costs going up?
Yeah, so look, we will have cash left over, be that as part of the loan facility or cash in our bank. And which way we play that, we'll see as we get closer. But we're certainly forecasting at, say, approximately 20 million cash in the bank when we pour our first gold bar.
Right.
So well and truly comfortable, we believe, to deliver this project.
Okay, so let's assume everything goes according to plan, which is mining is a brave thing to say. But let's say you're aiming for like Q2 to be pouring first gold. Is that right? Right. Correct. So obviously then cash starts coming in. What do you do with it? You've talked about Blue Spec, maybe adding to the pile too. So maybe let's start with that.
Yeah, for sure. So the first 6 months, there's a lot of completion tests with the bank. There's filling all these, they call waterfall accounts, all the various accounts you've got to fill up. before you can start stripping money out for your own uses. And generally that'll be about 6 months. At that point, feasibility done, permitting done on Blue Spec, we can then start to use some of that cash to develop Blue Spec, because Blue Spec takes us from that 90 to 130,000 ounces per annum. And we fund that 28 million of capex out of that cash flow.
Got it. So these waterfall things, right? So let's say 6 months to production, to get to production, 6 months to kind of fill up these waterfall accounts, which is part of the facilities that you've put in place. So we're 12 months out from making some sort of decision, or getting to a point where Blue Spec can start contributing in some way, shape, or form. Is that right?
Correct.
Okay, trying to understand that. And that gets you up to 130,000 ounces. I mean, at that point, what are you, 220 today, 220 million market cap today? Which is it's about right, isn't it?
No. Well, name one MD that ever says that they are overvalued, fairly valued. We're all undervalued, you know that. You've heard this before. But look, on our analysts, anywhere between 80 cents and $1 is the price target as we stand today. Now that includes increased discount rates on NPVs because of where we are. Those discount rates only drop as we move into production. So those price targets will increase beyond that as we move into production.
Okay, so that's another 30% from today's price of say 58, say 60. So another 30% they're expecting from you on the 90,000 ounce number. Is that them factoring in Blue Spec?
Well, it's 30 to 50% increase based on what we are saying will happen in the future, which is both the 90,000 ounce and the 130. It's the company as a whole. So they do factor in Blue Spec, but they discount it more because it's further out and doesn't have a feasibility study within that price target.
Okay. Like I say, we've always had conversations. You always delivered what you said you were going to deliver. So I don't really want to focus on that. You've done loads of presentations recently. I want to focus on the what next. Okay. So Blue Spec's done and dusted. You've got effectively your single asset company in Western Australia. Is that a concern, and what do you do about it?
Look, a single asset company trades at a discount to a multi-asset company just because of the risk profile if anything goes wrong with that one operation. So if you can get more value out of your asset by bringing in a second asset or combining with someone to make multiple assets, and you get an uplift in that asset value, it is worth doing 100% of the time. So, we are already looking at various opportunities out there. Again, we need to deliver on stage one, show we can develop, do as we say. But within a very short space of time, having done that, we would certainly like to be adding a second asset. Doesn't have to be in production. We're very happy to develop. We've got the skill set to develop, but we'd like to bring it in a reasonable time. So we wouldn't be trying to do greenfields exploration, find a deposit, permit, etc. We would like to find a relatively advanced deposit that we can turn our cash flow and skills to bring to fruition in the shortest possible time frame.
Right. Okay. So there's a few things going on. I just think it's interesting to talk about this because different companies will have different strategies. We'll do it organically. That takes time, right? And time is money. You're saying you would rather pick up a sort of advanced development play because that brings, we'll talk about the cost of raising the money versus the return on that profile. Why do you think that's better than perhaps, doing more resource drilling on your own properties? Why do you not like the thought of just doing greenfield exploration?
Oh, look, we're going to be doing exploration. We'll be adding mine life. Maybe we look at increasing capacity, but it still leaves you as a single asset company, one mill. Something happens to that mill. So you need a second operation. So to do that, you need a tenement package, or you need, a second area of work. And rather than starting greenfields on a whole new tenement package, with cash flow and with that skill set, we can cut the time where we re-rate our current asset on the back of joining up with a second asset. So, as long as you get it for a reasonable price, you're not just going to go out and grab anything at any price. It's got to be accretive to shareholders. But assuming it is, then we see that as a simpler way to progress.
So a couple of things there. So you obviously, building your own facility here. So you're not talking about like going and picking up a development asset near you and using the same facility. You're talking about a separate operation completely.
Correct.
Okay. So
Correct.
You and everyone else will be hunting for that. And, we've talked to people who've spent years trying to find a project which they don't overpay for. So how do you go about doing it? Is it a realistic expectation? What do you do if you can't find something that meets that criteria?
Yeah, look, we've done 9 or 10 transactions already to pull this project together. We're not afraid of transacting. And I think we've got a good track record of that and of explaining to potential partners how the combination can value add to both. So I think we do have that track record.
But weren't they different times though, Dave? You look at the timing when you did that. It was good. Gold was down. You didn't have to overpay. Australia's had a good couple of years of it. Right now, prices are up. Expensive, isn't it?
Gold prices are up. Equity values are down because we don't have that battery metal,
magic
tagline with us. Nickel, lithium, what have you. They're going through the roof in Australia at the moment, and gold producers and developers and explorers are way down from their highs. And we're seeing good value creeping in, even though the gold price is up, and we're still going to make, over $1,000 an ounce, 1,200, 1,300 Aussie an ounce for what we produce, which when we started this journey, I'd have never believed. It's still a fantastic gold price, but asset values have come right off. With those capital cost increases and labour tightnesses and access to equity as the equity money flows to battery metals, it's harder for developers now to get into production. And after us, I'm not sure who's going to be the next gold mine coming in because it's going to be pretty tough. So that really does open up the field for us to go and have a good look around.
Wow, you've crushed a few CEOs' sales pitch there, because I hear that there are lots of companies going to be able to do it quite easily. So look, you bought BlueSpec from Novo Resources. I mean, have they got anything more in their portfolio, or are there any other groups that you're talking to that you think would have an asset or project that you might be interested in?
Look, Novo is obviously just down the road. So, they're very busy. I think they've got 14,000 square kilometres of tenure in the Pilbara they need to chase after, and various other strings to their bow. We are looking at, as I said, operations we can develop. Because of their proximity to us, it's not a new operation. Maybe there's a few cast-offs we can get again for Warrawoona, but it's not what we're looking for as our next standalone operation. In the meantime, we continue chatting. We'll look at synergies of reagent deliveries and very unexciting things like that with Novo. If there's projects nearer us that make sense for us to acquire off them and it works for both, sure. But it's certainly not our focus.
Okay, yeah, it'd be interesting. I know they've got they're trying to get their mill up and running and optimizing that at the moment. Okay, so that wouldn't be a consideration. So I'm sort of intrigued what you say about, there should be more deals to be had here. So you're suggesting that if you aren't near production in Australia, times are going to get quite interesting.
I just think it's a lot tougher. We got in by the skin of our teeth. Timing wise, locked in a good price. Diesel's up, steel's up, labour's up, labour shortages, equity market interest isn't there like it was when we were raising money. And we got probably the last bump in that. With the gold price, we hedged at above 2,500 to 500 an ounce. With the gold price was north of that when we hedged. And without that, all of those things, they just all add up and make it harder and harder to get into development. And especially as equity value reduces, which it is across the board on Australian gold, raising a big swag of equity or an even greater swag because of the price increase from scratch without cash flow coming in is incredibly tough.
So it's all about timing and cost. If you can nail those things. So and just in terms of your timing on that, do you think you would? I mean, you've got to prove that you're going to get this thing into production. Okay, we're 6 months away from that, right? Which is pretty close. Do you think that you could go and have those sorts of conversations now, or do you feel that given the way the markets are going, it's going to be next year before you'd even want to think about having conversations with people about funding something like an acquisition?
Oh, look, our prime focus has to be on delivering this. It's more when there's a spare moment, we look around, we've got our eyes, we're always looking at opportunities using public domain data at the appropriate time. Sure, we'd like to to get a small team looking into a bit more detail, running a ruler over things so that when we're in a position to act, we're not starting from scratch. We know what we would like and what we think it's worth, and we can see if a deal can be done quickly or not.
Because right now, as it stands, you're not exactly a takeout target either, are you? Because it's not big enough.
No. Oh, I wouldn't say it's because of that. I think people will pay more for a de-risked asset. So yeah, we could certainly be a takeout target once we're in production and prove that this mine makes good money. Especially at this share price, it would be a steal.
Of course it would, Dave. No, but serious point. I want to talk about this because, yeah, you've de-risked it. Yeah, you're in production. But in terms of ounces in the ground, in terms of the scale of what's there today, I mean, it's not what the kind of majors are going to be looking at, is it? So it would be like, no. Yeah, but a mid-tier maybe come and look to sort of top up the ounces a little bit might be interesting. But you wouldn't want that. You want to prove some level of scale here. This isn't about proving you can get into production with one asset. You're serious about M&A. You're serious about growing the scale of this thing today.
Yeah, for sure. Look, I just come back to if you can add value through becoming part of an organisation with multiple operations, and if 1 + 1 = 3, whether we're dinner or diner is not really the question. It's, does it make sense? Is it accretive for shareholders? Does the bigger picture in the longer term make sense? So we can't be in control of being taken over, and it's totally the wrong attitude to hang out the shingle and say we're for sale. The only thing we can control is go and approach others about their assets where we see value. So that's what our focus is on. If anyone approaches us, of course, we'll have a conversation. We'll see if we think it's worthwhile for shareholders. We're not going to just say, no, this is ours, it's our baby, we're emotionally attached. It's all about what's the best value for shareholders.
Okay. Well, we said just before we started, you mentioned you might talk us through a flyover of the project. And do you want to pull that up and sort of talk us through, what's there?
We're now flying. So I don't know if you remember in June when we last talked, but there's been a lot of action since. I'll just pause this at the moment. This is ore on the ROM pad off to the left. So we started building our ore stocks. We've got the crusher installed here, and we're starting to backfill behind the crusher to tie in the ROM pad. Lots of structural steel going in and all.
Can you pause it for a sec? If on the bottom left, if you go back a bit, on the bottom left, I'm just looking. Sorry, this is real amateur speak here. On the sort of bottom left is this kind of grey rock, and then you've kind of got different coloured rock and obviously the ore, etc. So can you sort of explain what's going on there?
Nothing at all exciting. It's just depending where it's being dug out of. This is all for filling into the ROM pad. There's certain better material here we use for conditioning and backfilling around the crusher. It's more of a structural fill, but really this is all just getting put down for the ROM pad to expand. This ROM pad we need at 200 metres by 200 metres when we start milling, because we need a big ore stockpile.
Got it. Okay. 200 metres, wow.
It's probably about 70 by 70 at the moment, and a big valley to fill, so long way to go there. So anyway, we're sort of flying in now, and one of the exciting things we can see here is the mill starting to come together. That's now pretty well complete, the shell, as we speak today. So that's a pretty major achievement in a construction sense. The amount of work that goes into aligning those before those shells come in is good. 6 tanks almost to full height, just another 2 to go. Gold room structural steel, tails dome structural steel, concrete for thickener ready to get into place. Lots of these sheds going up, reagent sheds and stores, whatnot there. Slab coming together, and all the conduits done for the power station, the LNG storage, the diesel storage, raw water ponds complete. This will be the open pit contractor lay down, and we'll have a big office complex up near the crib room and a ablution block that's currently here. So, yep, plenty from that point of view. And then what I might do is just show you a couple of photos of that. Just to show again the mill going in and the tank area, the crusher in.
How much do you need to set aside for the remediation at the end of life for this? Because there's a lot of kit there.
There is a lot of kit, and generally speaking, the way most companies look at it is the value of that kit will cover the rehab of the site. You're always continuing rehabbing the waste dumps and the big things happening in the pit, and you've got money set aside for the tails dam, but generally the sale proceeds you get for the plant cover the
right. But do you need to, like you talked about those sort of waterfall accounts, do you need to obviously put that money aside? Is that part of the condition of getting licenses and permits?
So we rehab as we go. That's certainly part of it.
Right.
There's no bond per se in Western Australia to set aside. That's gone. We pay an annual fee, MRF fee, that goes into a big pot. So if someone doesn't do the right thing and fails, then there's a pot that the government has, not just on a site-by-site basis.
Got it. Okay, interesting.
That was a tails dam, by the way. Coming up nicely, Valleyfield tails dam, big engineering process there. You can see lots of bits of yellow kit, so that'll be complete in 6 to 8 weeks. So
you rent those, do you?
Sorry?
You rent the kit, the vehicles?
So Macmahon's are doing this. They'll be doing a major open pit mining contract as well. So some of this is rented, some of this is their own, but it's under their banner. And I've just got to work out how to get to the final video to share with you, Matthew, which is digging our first lot of ore off the top of one of our ridge lines. If you remember, our ore body is outcropping at surface, which means that, I keep talking about the ROM pad and having to get it to a size. This is a problem. We're digging waste from day dot. We need to find more, digging ore from day dot. We need to find more waste to add to that ROM pad. So we'll be doing some blasts over like in this area here, which is more waste. But we need to flatten these hills. So come March, April, we'll be getting big diggers in, 100, 200 tonne diggers. And we need that area opened up. So we're also taking those hills down. That's the ore we're putting on the ROM pad. That's what we're opening up, getting ready for March, April, for when the mill comes on.
So environmentalists, when you say, we're just going to level that mountain or that hill, and remediation and that sort of thing, I mean, because people don't think about that, do they? You're changing the topography, or are you? I mean, what's left at the other end of this? Have you ever done that?
Yeah, so there is a hole in the ground where the hill used to be. Our waste dumps, we meld into natural landform. You can see we're in a hilly terrain, so we meld them in. So from outside this range, you wouldn't even know that there's been anything there. We'll rehab it with topsoil and spinifex and all those. But yes, you do have a hole in the ground, which is 2 kilometres long by a few hundred metres wide in an area of thousands and thousands of square kilometres with nothing much else. So, yeah, there's a hole, but in the scheme of things, not a great deal. We have to go through huge amount of environmental compliance on, do we have acid mine drainage? How stable is our tails dam? Make sure there's no impact to water tables or wildlife by concentrating acidic drainage in pits. There's a whole thousands and thousands of pages of documentation that we have submitted and been through with the regulator. That means that we minimise our impact, apart from the fact that, yes, we are changing the landform. That is mining. Every mine does that, whether you're flat or in hills.
No, we were talking to a coal miner a couple of months ago, and they sort of were showing pictures of their remediation, as like you, they're sort of doing it as they go along. And sort of 10 years later, you wouldn't know there was any mining had gone on there. I thought it was after they'd finished. It was quite interesting because and quite important that they did do that.
With a coal mine and a strip mine and a horizontal ore body, that's a lot easier to achieve from having a smaller opening at the end. But for metalliferous mines, not so much. Having said that, you certainly won't have a tourist attraction here in 20 or 30 years because it will predominantly look like the surrounding hills. There'll be no plant, there'll be nothing to look at. So, all these old mines we go and visit on holiday and we see head frames and a bit of history. You're not going to see any of that. You'd be lucky to know that this mine was here.
Not you as well. The amount of CEOs that say they take their family for a holiday to look at a mine is incredible.
Oh, my lovely wife, a lucky thing on our honeymoon, we ended up in the Hunter Valley looking at coal mines and wineries.
Who says romance is dead? Right, Dave. Sure. I think we'll leave it there. Like, I'm glad everything's kind of moving along. I guess the next thing we expect to see from you is you're announcing that you're pouring first gold April-ish. Is that right? Is that the next big news?
Correct.
Okay.
Yep.
Well, good luck with that. Hope it goes well. A few things to do before then, but I'm sure you'll get there.
Excellent. Great chatting.